So there's 20 companies in this particular industry going into a sector. And you think DFH, DR Horton, DFH, Dream Finders Homes. Okay. So, so this is one space that it was a positive surprise in, I would say 2021, 2022, 2023 even, is how this space really did well. And I thought when we went into COVID that obviously the economy went down really fast, and I thought it was going to stay down for a while. I also thought that the mindset of the consumer, especially around such a big decision like buying a home, they were just going to be very reluctant and they weren't going to buy any new homes. But I was really surprised to see how well the stocks did in 21, 22, and I think 23. But the trailing 12 months for DR Horton, they're down 6%. Lennar is down 6%. NVR is up 18%. If we look at the space, I wonder if I can get. Here we go. So this is the 1 month year-to-date change. I was hoping to get the whole industry and see how it's been doing, but I'm not going to get that. So it's been kind of a mixed bag. Some home builders have been doing quite well. Toll Brothers have been doing well. Champion has been doing well. And I think you really like Dream Finders, which is down 33%. Let's take a look at that. And we'll also look at somebody who's really doing well, Capco Industries. I think these guys are manufactured homes, so we'll look at those guys. Toll Brothers is doing really well. Then we're going to look at Lennar because I'm familiar with Lennar. I owned Lennar for a while, sold them. I sold them because I think I sold them in 2021. I thought, okay, I made a little bit of money, but I think they're going to have a tough time going forward. And I was wrong, but that's that. So this company here over the 1 year is down 33%. Dream Finders is 2.24 billion. Revenue is 4 billion. They have really low PEs, and analysts think they're very discounted. These guys are growing. They grew very quickly in 20, 21, 22. Like I was saying, very surprised as to how, people were willing to buy homes during COVID, and people's lives were like upended, and a lot of things were kind of changed, and some jobs were kind of put at risk. But the scarcity in homes created a big opportunity for home builders, and they filled in that gap of inventory by putting out new homes. Existing home sales and existing home inventory really went down. People didn't want to list their homes. They were afraid to list their homes because they didn't want people walking through their home and spreading COVID in their home, getting them sick. So that's what created the scarcity, and the home builders benefited from that scarcity in homes, and they filled in that gap. These guys really benefited then. I'm curious to see how their stock has done over the last 5 years. Let me look at it on Google and see what that's all about. All right, so 5 year, you could see that, man, it's sold off. Even though they were growing their revenue, it was selling off because you look at their financials, right? In 2020, they were growing. But the stock price wasn't really going anywhere. Now, the market realized, hey, this company's doing great, and then it started to really work. I mean, at one point, you were up 400% on the stock because it went from $10 to above 40. But since then, since hitting that peak, it's come down from that peak about 45%. It's at $23, $24 a share. So is it going to go up or down? Let's take a closer look at the fundamentals and see what they look like. So they continue to grow. I'm going to look at the quarterly to see if the quarterly is actually better than the trailing 12 months. Looks like they hit a low point in the fourth quarter of 2023. And that was a low point. But their Q3 of 2024 was really good. Okay, so they continue to grow. Nice big company. Free cash flow. They're not producing free cash flow now. They haven't been very consistent on generating that free cash. And their free cash flow margin is not consistent. So that's a little bit of a red flag. I like seeing a consistent cash flow, and they don't have it. Gross margin, 20%. Okay. It's not, wildly attractive. It's not like, a big software company that has 80-90% margins, or a pharmaceutical company that has 80-90% margins, or NVIDIA. It's a pretty low margin business. Okay, so we have that. The forecast, I'm curious to see, only one analyst covers it, and he's optimistic about the company. Okay. According to that one analyst, the revenue is expected to grow for this particular year. I agree with that number because we saw the quarterlies coming in just underneath that number. But then it's going to be flat in 25. Now, what do I think about the space? So one thing that's been happening is the inventory for existing homes has been going up. And I believe nationwide, it's up to 4 months. And when you get to 6 months of existing home sale inventory, it could be considered a buyer's market. If you have 3 months of inventory, is considered a seller's market. So right now it's still leaning toward, sellers can get a good price for their homes. And I think home builders are doing all right with the available, competing against existing home sales. But the thing that I would caution you is that interest rates are staying higher for longer. And if you have higher interest rates, it just makes buying a house more expensive, especially since home prices have really gone up a lot. So it's going to be harder for people to qualify into a home. And they're going to have more choices. They have inventory of existing home sales that they can shop around. Maybe find a home that's less expensive in an area they want to live in, because new homes are great. They're beautiful, all new everything, all new appliances, everything's new. It's a really neat thing. I've never owned a brand new home. The properties I've purchased have been existing, and the one that I live in, we remodeled when we bought it. So the cautions that I would have on a home builder is you may have an opportunity to make some money, but you got to really keep up with existing home sale inventory, interest rates. Like if they're going to stay higher for longer, like in 2025, I don't know that mortgage rates are going to go down a whole lot. They're probably going to go down a little bit. And if you have a negative surprise in 2025 or 2026, it could really hurt the home builders. Home builders are not an industry where you have great wealth built, right? Like if I show you communication services where you have Netflix and Google Alphabet and Meta, you have two above 1 trillion value cap companies, and you have Netflix at 400 billion. That's wealth creation. Home builders are not that type of industry. And home builders have been around for a long time. That said, I think it's an industry that you need to think about. If you're an investor or plan to invest, you need to have your exit strategy defined, and you need to stick to your plan, because I don't consider it a industry that's going to double your money every 5 years for a long time. It's not a Meta. It's not, nowadays semiconductors have just been flourishing, Apple technology and so forth. So that's one caution that I would put out there is, if you're going to invest in, keep track of those signals within that industry that are going to tell you what's going to happen to this particular space. And obviously the performance of the company you're invested in. From what I'm seeing, these guys are performing quite well. I mean, operationally, they're good. Let me just double check their balance sheet. I'd hate to see too much debt, but we'll see. So debt's 1.5 billion, 1.3 billion if you consider the cash they have on hand. So yeah, they take them 3 years to focus on paying off that debt at their current EBITDA level. The last time we had a very bad environment for home builders was around 2000. Yeah, it was about 2008 when we had the Great Recession. Back then we had a lot of subprime loans that were, lenders were lending money to people who couldn't afford to pay those loans. So it created a lot of foreclosures, and it put prices artificially higher than they should be, because people were buying homes on adjustable rate loans. They couldn't qualify those loans. So a big glut of homes was put back in the market. A lot of loans were considered to be really bad. And that created a glut of inventory, and it created a lot of fear, the Great Recession. That's where The Big Short, the movie, came out of. The Big Short was when they shorted the subprime market, the mortgage market. So that caused home builders to go bankrupt, and they had a tough time. That debt level is not a problem that if everything continues to operate at the current levels. But if you have a bad surprise, and all of a sudden your revenue drops 20, 25%, that is going to be a heavy burden of that debt. So keep an eye on that debt. Right now, it's not a problem. You're right there at the limit, at my limit, which is debt to EBITDA of 3. See how it's 3.38? I consider net debt. If this keeps going a little higher, if some of your fundamentals drop, then this stock becomes riskier. So keep that in mind. So home builders, I'm not in home builders. I'm not going to be investing in home builders, I don't think. I invest in residential real estate and I rent it out to people. I have been looking into a multifamily recently, and will continue to do so because I think there may be an opportunity arising soon. We'll see. I've been watching a real estate guy that I really listen to, and he is a commercial real estate guy, multifamily, and he believes that the market's good, but I'm doing my own homework and seeing if it is. So that is the home builder industry. Taking a peek at Lennar. This stock worked for a while. Look at that. That's a pretty chart. Up 148%. I took them for a ride and I sold. Thought, it's not a good place to be. I thought it was smart for a little while and then it kept going up. So that's what I get for getting out of the stock. But more recently, it's really dropped. The last month, it dropped 18%. There is concerns out there. When I think the Federal Reserve decided to they communicated that rates were going to stay higher for longer. That had direct impact on home builders because it's like the mortgage rates are going to stay higher. And that's just going to be a headwind for the industry. So that's what caused that. I think the space, you got to pick the right one. And again, have a good exit plan, monitor your company as well. I encourage you to analyze them twice a quarter. Obviously when they announce their earnings, go through everything, look at them. And then in between quarterly announcements, take a look at them, see what's going on. If you don't have time to analyze your companies a couple of times a quarter, maybe you can lower the number of companies you own. If you enjoy it, like I do, you just get to do more if you have more companies. So, all right. So I gave you a nice long answer on home builders. Thanks for asking. Good luck with DFH, or I don't know if you're invested in it, but if you do, good luck with it.